Okay, what is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some stock analysis for Oracle because this is a stock I bought roughly a week ago here. As you can see, I have 14 shares at $193 a share, and I'm a pretty risk averse person. And I understand there's risks with this investment, but to me, it does look like a good idea to invest in this. I think they have a lot going for them on the bullish side, which we're gonna break down basically what's the bullish signs and what's the bearish signs. So let's start with I asked Gemini, give me a stock analysis for Oracle. By the way, Gemini does a fantastic job of just laying down all the things you have to know, showing you the bearish side and the bullish side, and it provides a lot of relevant and up-to-date information. So basically, let me just highlight the important things here. We know the stock is down. Oracle is successfully reinventing itself as an essential utility for the AI era. Here is one of the things that makes me bullish that really stood out to me. Oracle's RPO, which pretty much means like the amount of business they're going to get in the future, or the future contracts they have, surged to an unprecedented $520 billion, up over 400% year over year, which you can see that here on Qualtrim, just how big of a jump it was going from 130 billion to over 450 billion just in that quarter. So then we go back, their cloud revenue was up 34% year over year. Infrastructure growing at 68%. Their strategy is placing its database in AWS, Microsoft Azure, and Google Cloud. Then this one is also, I forgot about this, but this happened, months ago. I forgot about the Stargate thing with OpenAI. Oracle is a primary partner in the $500 billion Stargate project, building out 10 gigawatts of AI compute. This provides a long-term revenue moat that few companies can match, right? Because not everybody can get a deal like that. That's as about of a deal as you can possibly get. Net margins have improved to 25%, proving that Oracle can scale its cloud business more profitably than older legacy software. Okay. Then we have this is where the bearish things come into play. Oracle disclosed long-term data center lease commitments of 248 billion, which is roughly half, remember, roughly half of their RPO, right? So keep that in mind. That is a lot. That's a lot of debt, but it's also only 50%. A pretty good ratio. While these are for future capacity, they have raised alarms about debt management. The company raised its CapEx forecast to $50 billion just for some net income. So, see, net income of $6 billion they're doing. You see, that's where there's a problem. Well, actually, let's look at it like this. Here's trailing 12 months. They did $61 billion of sales and 15 billion in profit. That's why free cash flow is going negative now, because if they're spending 50 billion roughly on the to keep it the for capex, 50 billion for capex, 61 billion in sales. That's why free cash flow is going negative now. That's a bit of a worry, but again, with a backlog like this, I would be pretty confident they're in a good situation. Now, to add to that problem though, is the cash to debt ratio is not good. 116 billion in debt with 20 billion in cash is not good. And I understand that, but I also think they're in a very unique position with a very unique moat with the Stargate thing, with the OpenAI projects, with the all the orders they have from Meta, Nvidia, all this stuff. I think they're in a unique position. So then we go to investors are worried about the cash out before cash in gap. And like I said, it is a bit of a concern, but you can also look at it like, wouldn't you rather have the problem of not having enough money to keep up with your insane amount of orders than saying we don't have enough orders or something like that? Like you kind of have to either, pick and choose, which side do you want? Do you want to be the person who doesn't make the sales, or do you want to be the person who has the sales but just has to, go into debt pretty much to fulfill them? You would probably want to be the person who goes into debt to fulfill those orders and captures that market share. Building dozens of massive data centers simultaneously involves significant power grid and supply chain hurdles. Any delays in the OpenAI rollout could trigger further sell-offs. Now, over the past couple of weeks, I definitely have become more skeptical, more concerned with the the success and the growth that OpenAI is going to go through over the next couple of years because I do think there's competition. I do think it's costing a lot of money when they might not make that amount of money. And I do think all these companies are diving into this AI investments super fast. Um, there is certain concerns I have in that regard. I do think that Google Gemini is, one of the best AIs out there right now. I think it's one of the most capable and it kind of I think it works better than ChatGPT a lot of times. So there is a couple concerns. Um, then we have analysts with a $364 price target and mostly outperform ratings of out of 43 analysts, 30 rated as a buy or a strong buy, and with a consensus 12-month target implying a potential 40 to 50% recovery. And that's exactly how I see it. I look at this like it's going to go back over to, $250. That's kind of the way I see this. So that's why I'm willing to take a chance with this. I'm not a huge fan of negative free cash flow and, $100 billion of debt. But like I said, am I willing to take a chance on that because they are the ones that are involved in Stargate and have over $500 billion of backlog orders? Yeah, I am willing to take a chance with that. So we will see what happens here. That is pretty much my analysis for this. I think, let's see, analysts have them doing, EPS going from 6 last year, 7.35 this year, then $8 next year. We're looking at revenue growth with a huge acceleration, nearly doubling from 16 to 28%. So, oh, here's the other thing I forgot to mention. The other statistic I thought was super interesting was with that backlog, that 500 and whatever it is, $500 billion or so, that $523 billion of backlog, this year they also are accelerating the pace that pretty much at the amount of that RPO that is realized in gains in the current 12 months, they're increasing that number. So basically they're realizing those gains sooner than what they used to do, pretty much. It's not taking them as long to capture the gains of that RPO, basically. That's the other thing that made me very bullish because it was up like 45%, I think, year over year. So if they keep growing that number, let me see. Let's look at current RPO, I think it's called, for Oracle and 2026 projections. By the way, this episode is sponsored by my company, American Tallow. If you're looking for the world's greatest beef tallow, check out my product at americantallowstore.com. But so total RPO, $520 billion year over year. Oh, I was way off. Okay, sorry, not 40%. Year over year growth of 400%. So up from $98 billion in the same. Oh no, I'm sorry. That's a different number. That's just regular. Maybe not. I don't know. That's up from $100 billion in the same period last year, increased by $68 billion in just 3 months. A significant portion of this backlog is anchored by a massive $300 billion 5-year contract with OpenAI. There we go. I think that's what I'm looking at. There's the 40%. The current RPO is monetizing quickly. The percentage of RPO, this is the number I was talking about. The percentage of RPO expected to be recognized as revenue within the next 12 months grew to 40%, up from 25% in the previous quarter. They are building 72 multi-cloud data centers for Amazon, Microsoft, and Google. They are more than halfway through this goal. That sounds good to me. That's why I'm bullish on this stock. So let's see what happens. Let me know what you guys think down below.